All right. Awesome. All right, everybody. So this is how we are going to be. Let me go full screen. What the hell is this here? All right, everyone. So today we have a little bit on our agenda. I'm excited to go through all this with you guys, and this will be engaging like last time. So compared to yesterday's or last week's, excuse me, webinar, we did a group warm up. We're going to do a little bit of a different warm up this week. So there's two things that we're going to be doing in today's warm up. The first of which is actually going to be I want to hear about you guys. If you guys have a picture or if you guys would like to comment in the chat, unmute your microphone. It would be great to hear a trade that worked great last week. You know how if it was successful, if it wasn't successful. You know any of the details of the trades and some key takeaways you learned. And you know as I oftentimes emphasize, it's great when you win, but by losing and learning from your losses, that's going to propel you to win so much more because you gain that experience from those losses, right? So one moment, I gotta turn this off. All right, okay, good. See everyone joining. Awesome. Okay, so yeah, so that's what we're going to be warming up with on here. A little bit about your experience this week. We're going to spend about 5 minutes on this, and then afterwards, we're going to go right into the education. So the second half of the warm up is going to be about what are the 6 steps for the algo cycle, right? I want to know what you guys think they are. And we have examples to go through as well, always starting with diagrams and then going through the live chart application. I really want to embed this system in your brains that, you know, no matter where you've learned in the past or what you have been doing, even last year, since you joined in January, February, March, all the way up into June, right? It was initially, stated that, you can understand anything everywhere. And while you might be able to, that doesn't mean that's how you should trade. And in learning this over the past several months, the best way to bring it to you guys, so you guys can actually learn the most advantageous way for you to propel your results is trading a specific way and only that. So I'm excited to go through with you guys today, the Mastermind Prime setups. So these Prime setups we did discuss in one of our in our last bootcamp, right? And if you have any questions about it, you guys all have access to it. I believe it's on day 3 of October bootcamp, and we go through all the Mastermind Prime setups. Well, this is essential because any setups that anyone takes, you must be only taking these. Why is that? A, not only are they the highest probability, but B, they happen every single day. And this is what trading is about, doing the same thing the same way. And this is how you're going to understand when I say, the charts are clean, or this is a perfect setup, or this is always the same. It's literally a mirror image of the diagrams. And when you see these setups so often and you know how much they work because not only have you been in them, but you've studied them, you've seen it hundreds and thousands of times, this is where you're going to really maximize your efficiency as a trader, making the most that you can, and being the most consistent, not taking 10 trades a day, not, I'm going to take, buy, sell, buy, sell. None of that shit, right? Now, I know there might be some people in here who ping pong, but I think I might speak for you or take the words out of your mouth when I'm telling you you are hurting yourself by trading both sides of the market. That's not what successful long-term professional traders do. Choose a trend for the day and stick to it. Now, when you get more advanced, let's say you end up being wrong and you immediately know why and you have all that experience, then you can adapt and then, adapt to the market circumstances, situation, and then go in the opposite direction. But that's something that we're not even going to be discussing until everyone understands these Mastermind Prime setups. And these are all you're going to be taking every single day. So the reason why this is important, aside from what I just mentioned, is the accountability room. In last week's webinar and even 2 weeks ago, right? We've been talking about the accountability room. This is something I've spent a lot of time setting up, and the core foundation of this is actually the Mastermind Prime setups. When the accountability room, when you guys receive access, again, it's not going to be tomorrow or Tuesday. It's going to be about Wednesday or Thursday this week. You guys are going to see everything that's in there. And I will tell you right now, this will be the most utilized resource in the community, and it should be. Now, this is not going to be a room for everyone. And I say this because I understand that this is not something everyone's going to want to partake in. When a lot of people hear the word accountability, they fear it. They're like, shit, I have to do this. And I'm going to be watched, it's going to be like scrutinizing. It's not. The whole purpose of this room is to make sure that you're going to have everything you need, from the support to the system to the setups to like just the whole infrastructure for you to be profitable and consistent. Especially when you're trading funded, not funded, but when you're really trading firm, professional fund money, in 7 figures, 8 figures plus, you're having a risk portfolio manager look over you. You have to do risk reviews. They're watching every single thing you do. And the reason they're doing this, A, is it's a shit ton of capital, but B, they want to make sure that you're doing what you need to in order to generate the maximum results and efficiency. At the end of the day, we're humans, right? We're going to make, impulsive decisions. We're going to act irrational, but we have to have someone and something to help keep us accountable for our results, because that lack of accountability ultimately is just going to leave it all on you. If you want to lose everything in the day, it's up to you. If you want to, just do things that you shouldn't, it's on you. And, oftentimes you can realize is people will consciously do this over and over again. So this accountability rule will make sure you're going to be taking the prime setups. You're following your trading journal. You're following your trading plan. You're following and you're journaling every single day and sharing your journals. This is what I learned today. This is what I did. This is how I can improve. It's not about, oh, this is how much I made, this is how much I lost. It's about how consistent are you? Because the money is irrelevant if you're not consistent. It's so much better being consistent, doing 3, 6, 10% a week on maybe $100 account than having a funded account going plus 20%, minus 30%. Like that's not trading, right? So that's the point of the accountability room. And these mastermind setups are the first initial part of this room to make sure you're going to be accountable, right? So that's going to be the majority of the day. And then we will end off with some Q&A. During that, I know there's going to be some questions as I'm going through examples, but really afterwards, I'll take about 10 or 15 minutes for the Q&A. And then if time permits, we will do a forecast of GU, but regardless, I will be sending that on the Educator Charts channel. That's another channel that will start being actively used. As you guys know, I haven't been actively trading since really all November, all December. And then just last week, I really got on the charts back for the first time. So as of Monday, I'm back full-time trading again, and I'm stoked to be trading with you guys. So the Educator Charts channel is going to be a heavily utilized channel. And then another quick announcement is on the website. We do have the trade breakdowns channel that I don't know. I don't think it is one of the sections right now, but I'll make that a switch. I'm either going to be switching out the bootcamp or one of the other sections for the trade breakdowns, but there's a lot of good material in there too. So I'll keep you guys updated on that. Right. So that is going to be pretty much the overview for today. So if you guys want to type anything in the comments or ask anything quickly in the chat or unmute your mic before we get started. What's going on, Chris? How you doing, bro? What's going on, TJ? All right. Does anyone have anything? I'm gonna give you guys about a minute or so to type in the chat while I get some water, and then I'll be right back here in just a few seconds. All right, let's see. Does anyone have anything before we go ahead and get started? Also, there is, as I did mention in the announcement, I'm trying to make as many positive, well, not as many, but as high quality innovations to the community in the dashboard. So any feedback, anything, even the structure of these webinars, I'd love to discuss. Obviously, after today, I'll stay around at the end if anyone would like to pitch in for that. But again, this community is, besides the, the educators and the infrastructure of it, it's only as good as those who are participating inside of it. And we want to help you guys as much as we can facilitate a positive, successful, just motivating atmosphere and something that you want to be a part of and that you can call, your home and your own. And what's going to help us create that is by having the inputs and your feedback to create something really great and really special. So anyone who has any comments or any input, I would love to hear. I know that we discussed this a few days ago, and that's a call that I would like to have also exclusively just for that. But at the end of this call as well, I will stay around probably for 10 minutes or so for any input and feedback. So let's get this accountability up. Looking forward to that, and sharing my lessons with all of you. Yeah, absolutely, Dylan. I'd love to hear that, man. I have been looking at theory. I'm not sure what you mean by that, Matthias. All right, but does anyone have anything? Type 1 if yes, you do. Type a 2 if no, if you don't. Type a 1 if you have anything to say, and a 2 if you don't. If you're ready to go. What's going on, Azad? What's going on, Antoine? All right, sweet. Yes, the accountability is something I'd love to stay around and talk a little bit after and get some of your guys' input and feedback on what's currently there. All right, so the first things first, guys, is for 5 minutes right now. It is our time 2:57. So the next 5 minutes, I want you guys to unmute your mics to share a picture of a trade that worked or that didn't, share the link of it, or just type in the comments. And I want to hear about a great experience, a lesson you learned this week, or a failed trade about what you learned specifically. Again, your insights to these trades that you're taking can severely help other students who are struggling with the same thing or they're constantly seeing. As you can see from some of the students' analysis alone, some have drastically improved. And I gotta say, Javon, I mean, I've already said it in the chat, but your analysis has improved drastically. I'm not sure how you're feeling about it, but I can tell you from a few months ago to now, it's night and day. Your analysis has drastically improved. So awesome job, man.
Thank you, man. I appreciate that. I'm putting in the hours.
I can tell. I can tell.
Thank you.
Awesome. Well, who wants to kick off? And it can, if you don't have a chart link or anything, that's completely fine. Even just discussing some experience that you had this week. Just go ahead. Let's have someone, a leader, go ahead and knock it off.
Yeah, man. So I have a picture I could share.
Yeah, absolutely.
Let's see. Gotta save it real quick.
Yeah. If you want to have Discord or a link that I can click on and share the screen if you'd like.
Okay, where yeah, I'll send in the Discord real quick. But I can start talking about it. Just one of the main things that I've learned is to, well, I mean, it's been quite a bit, but just to really follow my plan is a big one. And specifically with what I sent in the general chat just now, is taking trades for my extreme refinement. Like there's been multiple times where it taps the larger order block that I'm looking at, like over just where the blue the trades are. No, on the far right. It's a little bit messy. I could send one. Zoomed in. It's the big 45-minute one right there.
Oh yeah. I see.
Yeah, I like waited till it tapped there and then tried to get a breakup structure entry and I lost. I think I lost 3 times on different entries. And then I just
Jerome, if you could just wait until Dylan's finished, you guys. You go afterwards. Keep going, Dylan.
Yeah, so I got 3 separate entries off of the breakup structure confirmation and hitting different refinements. But as if you can see right there, it hit my little 3-minute extreme refinement before it, broke the structure. And that happened to me multiple times. Like once it hits my highest time frame order block, I'm just like, okay, looking to get in for a trade after some confirmation. And then I just get taken out and I look again and I get taken out. And then I hit my trade limit. Like I only allow myself to lose 3 trades before I stop for the day. And the extreme, I lost 3 of them before I went to the extreme refinement. So, definitely learning that it only has to tap the highest time frame order block, but I've been noticing a lot of the times it likes to go to the extreme refinement.
Yeah, exactly. So it looks like, now this obviously isn't to scale, but it looks like what here is, as far as the setup, this is great, right? So you have your order flow, right? That looks great. And then you have your next highest time frame. You see that structure somewhat looks like this. So this is extreme. This is awesome. This is great, right? And you see here that within your order block, you had this order block right here that was mitigated. And then you see, here, right, this order block was mitigated. And this was your last, your order block, your highest time frame, right? So this is something that even happened on GU. I believe it was Thursday or Friday. And that's something we're actually going to be going over for one of our examples. But you have here, right, like we always mention, is the only order block that needs to be mitigated is the largest. And in this instance, right, as soon as price ran away, and then it came back and you have, this order flow, you then have this order flow, this is your order block, price came back into it. You waited for this BOS. So if this is your 45-minute order block right here, you see that you have this, right, this 45-minute, and you know that price can come all the way down into here because you have, an extreme refinement, 3 minutes as you have. It can just have the open and come down here. You're never going to know. So what we need to ask ourselves, one is time. Do you know what time this was around?
Yeah, when it first hit the order block, it was around 8:30, I believe.
This was 8:30 right here?
Yeah.
Okay, so this was 8:30, right?
Eastern time.
Yep, so that's a good confluence, right? Because everyone, what time is 8:30? What time is 8:30? Besides Dylan. Type in the chat, what time is 8:30? What confluence is that? Beginning of New York kill zone. That's a great confluence. And what we know about kill zones, right, is 8:30 can either, when 8:30 happens and it's a mitigation of an order block, 2 things can happen, right? One is it can be the true mitigation. And if this is the true mitigation, right, and you wait for that BOS, then that's your confirmation enter here, which this is a valid entry. Or 2, if 8:30 happens and this is your order block, right? If this is, let's say this is 8:30 right here, and you see this is still a valid entry, right? This is still a BOS entry, and this is 8:30. But what can happen is it can also be trap time, right? So maybe around 9:30 or 10:30, what can happen is price can actually come deeper into the order block, and then it can reverse. And in this instance, it looks like this almost happened. And maybe this was actually around maybe 11. 11 is London close. So my point to this is
that's exactly when it was, yeah, like 10:45.
Great. So your approach was perfect. And this is what's going to happen at times is when you have a zone that is so large, in this instance, I would never just set a limit, right? Like I always say, take your first largest order block that is a 1 to 415 above, but that doesn't mean, right, have a stop loss that's 10, 15 plus pips. At maximum stop loss for me, at maximum, including spread, would be 7 pips, but that means at minimum, my return should be at least 35 pips for a 1 to 5 before any partials. So in this case, your approach was still right? And the reason I'm spending a lot of time on this zone is because this is a fantastic example. And I'm sure that this happened to everyone at some point. If this has happened to you, type in the chat. If price was in your order block and you kept getting stopped out, how many times or who has this happened to? I want to see everyone. Type in the chat, yes or no. 4 or 5, right? So this is a very common and really, it's just a very serious thing that can arise. And we want to approach what is the best way to approach this? And Dylan, for you and for everyone listening, this is how you approach the scenario, right? This is how you approach it. When you have, and I'm gonna do a little example over here. When you have this large order block right here, I'm gonna illustrate that just with our, let's just do this blue right here. But this is your 45-minute order block. And within your 45-minute order block, with fractality in mind, what refinements do you have inside of a higher time frame order block? Does anyone know? Dylan, you can answer to it if you know. Inside of an order block,
You got the extreme and decisional?
exactly, right? You always have an extreme and a decisional inside of your order block. Now, if you're going to place a limit somewhere, what type of order block refinement do you place on?
The extreme.
Extreme, always the extreme. You never want to place a limit on a decisional. So what we're saying is in here in this order block, right? If I had to do something fractally, it would look maybe something like this. You have this, you have this, you have this, and you have this. And this is your higher time frame order block. Now, I can be a little different, but this is how your higher time frame would be. Within your higher time frame order block, we know that we're always going to have an extreme and a decisional refinement. So this would be your decisional refinement. This would be your extreme refinement. I never, ever set a limit on a decisional. Never do it. Can it work sometimes? Yes, but 7, 8 out of 10 times, it won't mitigate your decisional. It'll just pass it, miss it, whatnot. So you never want to place a limit on your decisional. So what does this mean then, right? How do we approach this scenario? When you're thinking about entry models, right? I only will have 2 or 3 main entries for any given trade, win or lose. So in this scenario, what do? When price is coming back in to your order block, right? You have your liquidity here, right? You have your liquidity. Now that you know how price is going to deliver into your order block, we need to know a few things can happen. What's the first thing that can happen when price taps your order block? It can just tap the open, right? It can just tap the open and run away. It can come inside of it, meaning it can come to the 50%, a little in, it doesn't matter, but somewhere inside of it, right? It can come a little bit inside of it, and then run away. Or the last option is they'll come to the extreme and then run away. So what is my approach that I do? One, I will always set a limit at the extreme. Always. If it's a high probability order block, especially following order flow, you should always know the extreme is going to be statistically proven to be the highest probability. Not in terms of it's always going to be the highest probability of it coming there, but it's always going to be the highest probability in terms of working out. If it comes to your extreme, know that this is going to be the highest probability of being profitable, of working out, right? So as a high probability, you always want to set a limit here. As far as what you do then, you have 2 other options, right? So that's your first entry. You want to set a limit at your extreme. Your next one is exactly what you did, Dylan, right? Your next one you want to do is, let's say you have price do something that looks like this, right? And you're like, oh, well, shoot, there's a BOS now. What do I do? Well, if this is your BOS, you need to know. And again, this is getting a little more sophisticated, but you need to know that one, this could be a BOS for price to do what you want. You can then just come here and go higher because Dylan, this is what you wanted to have happen, right? Right. So that's something that we want to have happen, but playing devil's advocate, what do we know can happen? This can actually just be an inducement, right? For price to then come lower inside and then it can just run away. So how do we approach the scenario? If you see a BOS, what I always say is do not fear loss. You need to know that you might lose, but does that mean that your approach is wrong? Fuck no, you're doing this great. So as far as your first entry, you did great. You saw a BOS, you looked for your order block. Now it should be an extreme, but you looked for your order block and you entered. This is still a high quality entry because you're never going to know at the end of the day if it's going to come down to here or not. So I would always take this entry. Now, if this happens and let's say you see, oh, damn, I lost. Do not even fret. Don't even sweat about it. Why? Your analysis is still right as is. Maybe you just entered a little bit too early, but you still entered with the right confluences. So now what you would do is wait for another confirmation. Can anyone tell me what are the 2 other entry types that you can use in a scenario like this? Besides your refined limit, what are 2 entry types that are going to give you the highest probability and the highest confirmation of getting in this trade? What are 2 other entry types? BOS, yes, 3 guy. The BOS is 1. So if it comes back in the order block, it doesn't matter if it just takes this out or if it comes deeper. As soon as you see a BOS, go for another entry. Go for it. Why would you fear this not working out when it's following your rules? If it's following your rules, don't make it emotional. Be objective. Is it in my order block? Yes. Do I see a clear break of structure? Yes. Focus then on your order block. That's it. Don't make it emotional. Oh, I'm going to win. I'm going to lose. Trust it. Trusting in yourself, believing in yourself, and believing it's going to work is half the effing battle without getting in your head. So this then, Dylan, this will be your next entry, right? Right. So this would be your next entry. Now, if this ends up failing, you only have one last opportunity. I've never waste more than 3 entries per an order block. Only 3, and that's it. So once if this works, awesome work, great. If this fails, you're just letting your limit order hit. And then that's it. You're off. You're not touching it anymore. So in this scenario, this is how I would approach it. Now, a little bit differently, if it's not a BOS, right? The only other option would be a what? No refined limit, no BOS. What is the next highest probability option?
Order flow.
Good. Dylan posts this order flow, right? The next thing would be this order flow. Let's say you see this, you see this, you see this, right? Where would your next entry be? Well, assuming your higher time from order block was mitigated, then have your order block, and then this would be your next one, right? And then you just go higher. So limit yourself to 3 entries maximum per any trade idea. And what a trading idea is ultimately this. If this is my order block, this is my direction, this is a trade idea, right? This is a trade idea. Now you can have 3 entries per trade idea. Hopefully whatever one works out is the one you're going to work. But still, Dylan, this was a great analysis I have. This is great. But now reflecting on it, even before or after going through this, what do you think you can do differently in the future? And how can you use this as a prime learning experience?
Yeah, definitely just not take emotional decisions and trusting my analysis. And I like what you said about just having 3 entries per order block and having them very specific like that. Because I just sent one more picture in the Discord on the lower time frame. You can see all the entries that I had. Those like I think I marked a few more of them out. I had that first one, and then the 3rd one, and the 4th one. So that's second really small.
So for this one, right?
Yeah.
Entries, realistically, what I would have done is seeing this. I was against structure, right? You understand structure just so you understand inducement, but if it helps you market, that's great. Here, my first entry for sure, after I see my BOS here, I would say this is a BOS or inducement, right? Where is your order block entry? This comes with a lot of experience, but you're going to know that this wouldn't be valid, right? This is not valid because it still has a form of equal lows, and we have what do you call it? We have imbalance flow, right? Also, we have the trend line, right? Also, key zone support resistance, right? So there's a lot of reasons that why I wouldn't choose this one. But what I would do is I would definitely be looking at this extreme. And in this example, yeah, you would take a loss, but does that mean, you're failing whatever? No, you're following your rules. So this for sure, for me, that would have been a loss. But because it broke this order block, I'm not just going to go chasing it and say, oh, here's another order block. No, right? There's no clear BOS. There's nothing indicating it. So I would have had realistically one entry, it would have lost. And then what I would simply do is then just wait for price to mitigate my order block, right? And as soon as it would come down to mitigate, I know this is my higher time frame. And then maybe on the second time frame structure, you would see, this fractally speaking, right? This, you would see this. Here would be your BOS. Here's your order block. And then guess what happens? Price will then run away. So this would then be my second entry if there was no order block. So in this case, I would only have two entries. That's it's going to make up for it drastically.
Yeah, and down there where you were marking out the red lines was the extreme refinement.
Awesome. Yeah. Does that?
So I can see, that clears up a lot. I can see just the way that you mark the structure. I just marked the structure wrong, and because I saw this. Let me annotate real quick. I just saw this right here, the internal breakup structure, and that was my confirmation to get in right here.
I gotcha. Yeah, my biggest tip is keep it obvious. Squint your eyes and just see what is the most obvious. And the more you mark structure, the more you practice, the more, like, I promise you, it's just gonna become unconscious. Like, I see this, like, because you've done it so many times. But this is still great. You did a great job, and I'm really looking forward to this week and how you can learn from this, because this is something that everyone has struggled with at some point. Even me myself, I remember a while ago, order block. Seeing order block, why am I taking 1, 2, 3 losses? Should I just take the extreme? Should I just take the largest order block? Do I, like, there's so many different things to do. But the best thing I found is always set a limit at the extreme of the order block. Don't over refine it. Just make it a 1-5 at the minimum, and then wait for a BOS or an order flow entry as soon as it mitigates, the highest time frame order block, right? And then just follow the plan. And if you're, as soon as you hit 3 losses, just walk away. I don't care if the trade works out, move away, because you have to have that discipline to follow your plan and see it all the way through. That is so much more admirable than, winning, but then taking so many losses to get there, right? So that's like you said, that's gonna be a huge part of the accountability, is making sure you're doing everything, and you're gonna be learning so much more efficiently with these, experiences. Awesome.
Appreciate it.
Yeah, man. Thanks again for that example. This is really good. All right, so everyone, about the webinar, how I said, if it's going to be about an hour, that was BS as usual. This is going to be a little longer, so if you want to stay on, awesome. This is going to be a fantastic webinar. We have good stuff to go through. This is without a doubt going to be one of the key webinars for, for all time, for that matter. So if you guys can stick around, it'd be great. Keep the engagement, ask questions. I love it. And this is just all more going to help you and create a very high learning experience. What would those 3 losses total 3 points? That's a good question. That's all based on the setups, right? So I'm just talking about a setup alone. You should never be chasing more than three entries per trade idea. That's it. This doesn't have anything to do with the points. That's more of a daily perspective, like a daily, right? This is just for entries within an order block. Yeah, bro. Thanks for hopping on, Gabby. All right. I'll go through. But I would like to have someone else just share an experience from this week, and even just talking about it. Again, I spent a lot of time on Dylan's because that's huge. It's such an important one.
Yeah, can I make a comment on so what I notice sometimes, at least through my testing, is that like when we have like an order block and like price comes in and we have like a shallow mitigation with a BOS, usually this low is an inducement. If it didn't mitigate like a refined zone, usually it's an inducement. So when I see that, I usually wait for order flow to be respected and then look to enter off of this. But that's just a comment and something that I noticed in my testing. I don't know if anyone else has, but just wanted to point that out. And I dropped 2 images in the Discord Dreamers chat of a trade that I took this week. This is actually the trade that passed me phase 1 of my 10K. But the setup is like textbook A+. According to my plan, and I'll even drop a Notion link to a little folder where I keep what my A+ setups look like. And one thing I've been doing is just writing down like this, basically like the sequence of events that occur that make this a high quality trade. So here, 1 second.
More money, less trades. Yes, sir.
yeah. That's the model for the year for sure. All right, so the actual execution, I don't have the MT4 screenshot. Oh, well, yeah, so the trade is posted in there. It's a 15-second entry, so I know it's not like the exact criteria on how we execute, but like it's the same thing, just a little more fractal. Because I tested 15 seconds and it works really well for me. But yeah, I mean, it's a simple trade, just following order flow. And what I noticed is that at the end of my week, right, I took about 9 trades this week. 4 of them didn't follow my plan and lost me money. 3 of them followed my plan and made me money, and 2 of them followed my plan and lost me money. So I noticed that like my strike rate, and this is something that I've been noticing over the past few weeks, but my strike rate could be so much higher if I continue to work on cutting out trades that pretty much don't follow my plan. And it's stems from those expectations. So that's why I was talking about that the other day, is because sometimes we can overanalyze and trip ourselves. And then once we've analyzed to the point where we believe whatever we believe, we tend to jump the gun and just make those silly errors because we convinced ourselves that we're right. And that's what I found with my trading, is like, damn, like sometimes I notice my best analysis comes from, like the first 15 to 20 minutes when it comes to the charts, because that's when I see things the most clear. So after that, I just set my alerts and I go. To come back and overanalyze or reanalyze. Yes, you can adapt to current market conditions, but at the end of the day, I really believe like when you first show up to the chart after your routine or whatever, that's when you see things the most clear. So that's just
real quick, Chris, is how many times, and I want you guys to really say in the chat, or anybody can tell us, is how many times have you realized maybe you took a phenomenal trade, as soon as the session started, or maybe a little bit afterwards, and then you're just like, oh my God, I need to get more. And then you enter, or you find other trades, and then guess what happens? You just piss everything away that you just
I literally blew my whole account doing that.
I'm sure everyone at some point has. Yeah. If less is more, like you're saying, more money, less trades. Think about if you just, and this is where in the moment it's difficult, pulling yourself away and being disciplined, is like, imagine where you would be if you just took that main trade, even if it's just one entry, 2 entries, 2 trades for the day. You just took it, and then you knew that was going to go where you wanted, and you chose to step away to avoid unnecessary loss, and then it just compounds drastically over time, rather than, oh my God, I got to go full margin, and then you just lose everything, right?
Yeah. You have to see it through, like you said that earlier, and that's such a huge topic that I feel like we all overlook sometimes, because in the moment we just want to win this trade and make money on this trade, but it's not really about that. It's really just about following your rules, like you said, because making money from the market is just making consistent money. is literally just a byproduct of you doing the same thing over and over again. And when you stop putting your emphasis on winning and just start putting your emphasis on following your plan, the results literally start to take care of themselves. Even though today wasn't a perfect week, despite that I took 4 trades, I didn't follow my plan and lost me money. I still ended the week 9% up. And even though it's a challenge, it's just like, imagine I cut out those 4 losses that, lost me money. I could have made 15, damn near 20% in a week. And that's kind of the level I'm trying to get to, before the year is over, where every trade I take fits my system, and win or loss, it doesn't matter. You just move on. So
yeah, I mean, that's huge. And it's like sometimes the easiest things to do or the simplest are the hardest, things to actually do, right? It's the hardest choices to make, because when you're trading, especially, even in life for that matter, you're not going to get where you want to be by thinking where you currently are. You have to think from your future self of where you want to be and act exactly and do the things that person would do. And that's something that many traders fail to understand, is you have to think from the perspective of where you want to be. Like your consciousness is not yourself. Like your thinking, your conscious mind is not, your subconscious and your conscious are 2 different aspects, right? That one voice that's telling you, oh, do this, the other one saying, no, don't. You need to listen to the voice that's the logical rather than the emotional, and separate the 2 and truly be objective in your approach. And when you can do that, you'll be a successful trader. And it's like, when you start reading these trading books, or as soon as you join, you always hear, whether it be Trade with the Trend or Trade Smart or, less is more, all of these things. And whether you believe it or not, everything it's going to take for you to get successful. But ultimately, where you're at right now, and the profits you're making or what you're losing or the learning curve that you're having, it's a direct reflection of the skill sets that you have. The one thing and the beauty in trading is you can't cheat. You can't hide your results. You can't fake it. Like anything that you're doing in the market is a direct byproduct. It's a direct reflection of the skills you do or do not have. If you're not making the money you want, you have a management problem. You have discipline issues. If you are over trading, or if you are, not understanding concepts, maybe you're not learning the most efficient way, or you're not studying where you need to. So it's like I say, in order to know what's right, you first need to learn what's wrong. In order for you to get where you want to be, you have to rewrite those wrongs and patch them up so you can keep going along your journey. And it's like, that's where psychology is it's everything in trading, no matter what trading style you have. So
100% agree. And one thing I really realized, one of the biggest lessons is that, in trading, you pretty much have so much power. Like, it's a lot of power that most people just can't handle, which I realized. And it's like, you have all the power, and if you can't manage it, it'll just be used against you. And that was like one of the biggest lessons I realized. It's like, because when you're trading, you literally create the experiences you go through, so it's like, that's why I have on the image, you're the house, right? You're the casino. You create your rules, you create the game. And if you don't follow them, then that's on you. You know what I'm saying? The market isn't going to do anything to hurt you. The market isn't here to hurt you. It's just, if you understand that you have the control, except for the outcome of the trade, but everything else is in your control. Whether, how much your risk is in your control, whether you take this trade or not is in your control, how you decide to manage this is in your control. Like, everything is in your control. And once you really start to understand that, you just have to make a conscious effort to manage the power that's, in your control.
Yeah.
And that's pretty much what I've been focusing on. Just Yeah, go ahead.
I'll say 2 things on that, and then Chris, I love hearing you talk, bro. Let's do it for the end. I can talk to you for hours about this shit, because everything that you're doing. Just 2 points on that note is just one quick point is, it's like, even if you're wanting to go for, I want to get funded, I want to go for 100K, 300K, whatever, you need to realize you can't just jump to the top of the ladder and expect to do well. And something that I've learned, and I've seen traders do, is they always want to go for the maximum amount of funding, where I want to get 100K, 200K. Do you have an experience with, $1,000 account, $2,000, $3,000 account? If you don't, you're not qualified to be trading those larger numbers, even if, it's just ratios, it's just numbers. Sure it is, but the numbers, I can tell you 100% will get to your mind, and it'll be the make or break of you. So if you're with these larger challenges, go to a smaller one, start with a 10K, start with a 25K, because if you can pass that, you can pass the higher ones. But if you can't pass the higher ones, it doesn't mean to keep going after, wasting so much money. It's trusting the process. It's the journey, right? We all know it's not the destination, it's the journey to get to the destination. So making sure it's measurable and scalable is essential. And you're going to learn everything. You're going to be learning. If you don't have the experience of what we're referring to now, I promise you, over the next 6 months, maybe even sooner, maybe even later for some, you're going to know exactly what we're talking about. You're like, holy shit, it wasn't the strategy all the time. It was my approach, it was my mindset. It was everything else, because it doesn't matter what setup you use, as long as you can just follow a plan, and that you have undeniable confidence, your shit, and it's just being able to see it all the way through, no matter what anyone else says. And especially when you're first trading, you want to see what's this person looking at? What's this person looking at? I want to see what they're using. Even if you say, as a confluence, subconsciously, even you're going to be influenced. Maybe they could be right. Maybe they could. Guess what? Maybe you could have been right the entire time, and you just ended up looking and getting influenced by someone else. For me, when first starting for the first 2 years, I know I was just trying to look what everyone else, was doing. And for me, I would say I'm using it as a confluence. And even though I would use it as a confluence, it would ultimately give me some level of doubt. But once you have the experience, and once you have the undeniable trust and confidence in your analysis and your skills, you don't give a shit what anyone else is looking at, because you trust yourself so much that your analysis is the best analysis, no matter what it's not.
Yep. Yeah, because at the end of the day, like, how I look at it is like, okay, you're looking at other people's stuff, and it's like, where does that stem from? Because that creates, what you really have there is just an unrealistic expectation that maybe I'm right because this person's looking at it this way too. And once that expectation is there, it literally has potential to cripple your execution.
Yep.
And that is the biggest issue that most people never realize. And it's like, it's not about this particular trade. It's about being able to repeat the process of executing properly over a series of trades. You know what I'm saying? So it definitely takes like experience to get to the point where you start to think this way. But I know that this way of thinking is really what separates like the pros from the amateurs. Like, the amateurs are just focused on winning their next trade. And it's like, the pros, they don't really care. It's just, if they see the setup, they're hitting it. It doesn't matter what the circumstance is, because they have their risk management protocol. So it's not like they're going to take a detrimental loss on one particular trade. But some people, because of their emotions and expectations, sometimes they might think they can risk more on this particular trade for whatever reason. And then this trade happens to be something where crazy news event, I don't know, you get the idea. What will happen, or what can happen will happen, like you always say. And it's like, people hear that and it just goes right over their head. But if they really understood the power of just executing and looking at this whole art in a series of trades perspective, it'll change everything. It'll literally change how you view trading.
Yeah, man.
That's the trading gospel right there, for sure.
Hey, Griffin, can I say something really quick?
Yes.
I kind of see how, everybody's consciousness is starting to switch over the last week, becoming more disciplined. And I started reading The Disciplined Trader this past Monday. And I watched day 3 of the boot camp for the first. I wasn't in, I didn't get to see day 3 or 4 live.
Oh, sure.
I was traveling that weekend. That happened in October, but I got to watch day 3 this week. And I don't know that I would have necessarily keyed in on what you kept saying in day 3, like I would now, after I paid so much attention to what I'm doing wrong. And then actually reading this book this week. And you kept reiterating the same thing. This is the easy part. The hard part, the real part of this is the mindset. You said that maybe 15 times in day 3, which makes me want to go back and watch day 1 and day 2 and see how many times you said it then. Because I know my thing is I'm too linear, focused on the trading process. That I know that I have a strong grasp of it, but I'm not concerned about what's actually going on in my mind at that moment, what's actually happening in my head and what I've rehearsed in my head versus what I'm trying to do with my hands in the charts. So, I think that all of us will go to another level when we actually think about the real professionalism that it takes to be a trader. One of the things that it said in the book was he talked about how all of us have had success elsewhere. And we think that because we've come from some sort of success elsewhere, that translates to what happens in the market, that we can just impose our past success onto the market. And that's not necessarily true, because it's what happens in the market and the ideology and everything that happens in the market is a whole different skill set than what it took for us to be successful in any other thing that we've done before. And so like, that's very humbling in itself, because we can all say that we're pretty damn disciplined in something, and then we show up here and it's not showing the same. So, I think that first, I think all of us should be reading The Disciplined Trader. You said it 100 times, and I'm finally reading it. But really, to take us to that next level, to be a professional trader and execute the trades and not tie emotion to it, not tie the things that are actually, destroying our some of us our capital, some of us just our confidence, some of us is both, but we're going to take us to the next level. It's really the mindset that's going to set us apart from everybody else. And I know that's what's being said, but I'm really seeing it now. And I'm just putting that out there.
Yeah, beautifully said, Javon. I mean, it doesn't even matter how many times, something is said. Like, you could hear, someone say something a million times, but it maybe it just takes a different change of perspective, or you're hearing it from someone else. You're like, oh shit, now I'll just click, right? And that's why it's like, I was so disciplined trader, favorite effing trading book of all time. Trading in the Zone, great. And it's like, once you realize, once you've been in the trading game for a long time, and not just, the practicing, the actual trading and making it, your lifestyle, it's all mindset. That's what separates those who are successful and those who aren't, is the mindset. It's not just the strategy alone. Again, you could use retail concepts and be profitable if you just have discipline, if you just do the same effing thing, because there's not just one right way to trade. But with our edge, you can get a lot higher degree of accuracy, return, but it doesn't mean shit if you can't control your emotions to be taking a million losses before you actually, get that one winning trade. So yeah, man, that was very well said. And it's just your mindset, everything is. So once you can really start to study, and what I say is explore and learn the realms of your consciousness, your fears, your greeds, your desires, write all of them out. And this is something even on a whiteboard I would write out. I am fearful XYZ. I fear losing, or I fear, that I won't be successful, or, I get greedy when I get more than this amount of money. Like, you need to see what everything else is in front of you. And then once you know what your trigger points are, what your pain points are, then you need to have a resolution. I am, fearful when I don't have confidence in the setup. Okay, if you don't have confidence, what you need to do is only trade these setups. And then once you trade these setups, you gain confidence. It's like you identify the problem and then you create a solution, not in the moment, but you need to know what you're going to do for any situation, not just analytically, but psychologically. And it takes a lot of experience, but this is what's going to make you so successful in the long run. Outside of trading alone, you become an abstract thinker, you become a critical thinker, and just thinking about situations and how to overcome anything. And that's how it applies in life. Like, you literally show up every single day to the charts, like I said last week, and you have to get happy whether you get punched in the face or not, because you might lose a battle, but that doesn't mean you're going to lose the effing war. You're going to become successful, but you have to fail your way to success. So having a mindset that's enabled you to do so is essential. But yeah, man, thanks for saying that. That's very well said. I'm glad that it's starting to click for you, bro.
No doubt.
Awesome. Well, as much as I love talking, listening to you guys' experience, I would like to save that for Q&A near the end. So now let's get into some of today's fun content, right? So first thing is, we're going to be going over the 6 steps of the algo cycle. Now, this is for a warm-up, and what we're going to be doing is we're going to be going over a diagram review. So now you should know these, but if you don't, there's 6 essential steps you always need to be mindful of whenever you see the charts. Even the examples of some of the students' trades that we just went over all have the anatomy of the algo, everything. And you need to know technically what's happening, but then psychologically what is also happening as well. So we're going to start with that right now, right? So we're going to be looking at this right here. This is going to be our first diagram example right here. So this is going to be, what are the 6 steps of the algo cycle, right? So the first thing, before we get into the algo, everyone, and this is going to be engaging interactive, so you can unmute your mic, type in the chat, but the first thing I want to ask you guys is, when you first get on the chart, what's the—
Sorry.
Yes, ma'am.
We are looking at the Discord display, your Discord screen.
Thank you, Cecilia. I thought I wasn't sure of that. Okay. So we're going to be going over the 6 steps of the algo. Okay. So when you're first on a chart, what's the first thing you should be aware of before anything else, before any of the technicalities? What's the first thing you need to ask yourself?
Direction.
Direction, yeah, trend.
Direction, right? You need to ask yourself, what is the trend? What is the direction? So in this case, we can tell that we're bearish, right? Now, whether it's short term, whether it's long term, we don't know. But based on what we have access to right now, we're going to now identify the 6 core elements of the algo, right? With the specific phases of it in a downtrend. So first, what is the trend? It doesn't matter if you draw structure or if you just draw, a trend line just to kind of gauge where price is going. We're in a downtrend. So the first thing, right? This is what we're looking at, right? Let's say this is where price currently is. I'm just showing the final result. What's the first step that happens that creates this whole movement? What's the first core piece of the algo? Not the anatomy of the algo, but what are the steps? Inducement. Initiation, inducement. Okay. So let's focus on, this is the area of focus right here. So we can focus on here. What is the first thing that we're going to be drawing our attention to? Let's say that we maybe have an order block right here. Let's say that we have an order block right here. Okay. This is our point of interest. And let's say here, this is our area of focus. What is the first thing that we should be generally looking for that's going to start the algo cycle? Let's take one at a time, right? Let's just do one. What's the starting left to right, top to bottom? What's the first thing that we see? What's the first phase before the inducement?
You look for your range?
No, not the range, right? If we know we're bearish, and let's say maybe this is an order block that we're looking to buy off of, we need to see how price is going to deliver into it. So what's that first phase? Trevor, build up. Dylan, build up. Good. The first thing that we need to see before an order block is mitigated, right, is we need to see some form of build up. Now, what I want everyone to do is identify the build up on the chart. Where's the build up, and where are we building up to? Right. So this is the build up. Type in the chat, what are we building up to? Because this is going to be the second. Let's get everyone typing in the chat and active, even if you think you know it. Right? Build up. We are literally building up to the inducement. So what does this mean? We need to understand we have traders who are trapped on lower time frames, and we have those who are focused on the higher time frames. Both of these traders need to be trapped. So what's happening? On our lower time frame, what we can see is we see that we have a low, lower high, lower low, lower high, lower low. All of these traders who are just focused on this lower time frame, they're only focused on sells. So they're focusing right on, if I go here 1 second, I saw my build up tool. 1 second, y'all. Make sure I have this. Bro. Hold on. Right, so the first phase is always our buildup. This is our buildup, right? So now that we have our buildup, the next thing is what are we building up to? We're building up to an inducement. So those traders who are getting trapped on our lower time frame, what's also going to be happening is our higher time frame traders as well. So you have those who are focused on internal trend. And again, for those who don't know what I'm referring to, you have your main structure, right, which is our low, lower, high, lower, low. And then within our main structure, you're always going to have, right, internal structure, right, or internal trend. So you have those traders who are only going to be focused on this internal time frame. So how do we cleverly, or how does the algo cleverly trick both of these traders? They have to induce both of these types of traders to believe that the market's going to continue. So where are these points going to be happening? Well, ultimately, these lower time frame traders are trapped by the time the inducement happens. The inducement is what's inducing everyone to believe, from the higher time frame to the internal time frame traders, to believe that the market's going to be continuing lower. So the first phase is the build up. You're always going to be building up towards your inducement. Now that we've identified our inducement is the structural point, either a high or low. In this case, if we're in a downtrend, your structural inducement is going to be a previous lower low. As soon as price builds up to your inducement, the next phase is what? What's the next phase of the algo after the inducement? After the inducement, what's the next one? Wait for everyone to type in the chat. Right, this is our trap and our mitigation. So by the time the inducement is taken out, right, this is what creates the trap. The difference between the inducement and the trap is the inducement is the early buyers who are in the market, right? The inducement is the area where sell stops and buy stops are going to be. So sell stops are going to be below here. So this is the inducement. When the inducement is broken, this is officially when these types of traders are going to believe the market now is going to continue in this instance, right? So in this instance, after the market breaks a low, this is what creates the trap. So before going further, does everyone know the difference between an inducement and a trap? Yes, no, need me to explain in a different way? Again, let's get everyone to participate. Four yeses. Does everyone know the difference between an inducement and a trap? Again, this one up is important because it goes into our prime setups. All right. Difference between an inducement and a trap, as Earl said, is the trap takes out the inducement. In other words, right? Good. So now we have our inducement. And everyone in the chat, what type of inducement is this? 1, 2, or 3? 2. Good. This is a type 2. Type 2 inducement. Why is this a type 2? Because it's inducing continuation traders. They're seeing a lower low being broken, so they think structure can continue. We have now our build up to our inducement. We then have our inducement getting trapped, which is the mitigation, which is right here. So this point is going to be our, I'll delete that, but this is going to be our 3. This is our trap and our mitigation. Our trap, we're just going to say it's going to mitigate our main order block. Doesn't matter if it's an extreme or decisional. Now that we have this identified, what's the fourth thing that happens after you have the trap and the mitigation? What's the fourth thing? After the mitigation happens, where do we expect price to go next? Good. It's going to react to an SMT, right? An SMT. What is a smart money trap? Again, there are diagrams in the videos and on the website for smart money traps for type 1 and type 2. If this is a type 2, right? Type 2 induce continuation traders, right? So when a type 2 happens and these traders are trapped, what's going to happen is the false order block. Where is the smart money trap going to lie in this instance? If continuations or if a downtrend is the wrong trend, right? This is the inducement. Where is the trap? Where is the order block that all continuation traders are going to be looking to trade from? Where are smart money concept traders going to be looking to trade from in this downtrend that they're seeing, right? They're going to be looking right here because they think, oh, this is structure, right? This is my order block. While this may be true, it's not, because there's a much larger picture at play. So this is our trap. So now with that in mind, to the right, I want everybody to analyze and identify where the trap is over here. Good. So this is the trap, the smart money trap. And the smart money trap creates a pullback, right? It creates a pullback. So if you've ever entered an order block and you got a little reaction and then it failed, that's an SMC trap that you're entering on. So now that we have this is what we're going to identify as our SMT. SMT. Good. Now that we have our SMT, what is the next phase of the algo? Wait for everyone. Good. Is order flow, aka also known as what? At this point in time, what should we be looking to do? As soon as order flow is intact and price reacts from our SMT, what are we looking to do? Enter. Good. Enter stack. Sure. The entry, right? So now we have our entry right here. Now, yes, there's going to be an inducement here, but I'm keeping this simple for right now. So yeah, now we have our entry. And based off of what we can currently see, what entry models does this fit? Well, of course, it fits our inducement entry model. Perfect. It also can fit a internal BOS model. Great. Now you're in the trade. Awesome. Now, after you have that, what's the next and final step of the algo, right? We have our initiation point, which is right here. This is our initiation point. Where is the completion point? Yep. As our target, trap. just ends off with another trap. So right here. Now that doesn't mean it just needs to go to right here, right? But this is what should always happen, not sometimes. This is what should always happen when you're trading algorithmically, trap to trap, taking out sellers, taking out buyers, right? Taking out buyers, taking out sellers, and vice versa. So this then would be your trap. And what type of inducement is this? What type of inducement is this? Good. So keep it easy. It goes from, if you have an initiation of a type 2, then your target is a type 1. 2, 1, 2, 1. Now, again, this can get exponentially deeper, but we need to stick to the basics, right? So then this would be your first target. And then again, it all depends if we have an uptrend over here. This will always be your first TP. Why? Because guess what? Price can just come down here. And Dylan, doesn't this look similar to what happened to you on Friday or whatever day it was, right? If this was your higher time frame order block maybe that you had, it reacted, and then guess what? Maybe it failed afterwards, right? So if I had to show everyone just right here, for example, what I'm referring to,
Yeah, looks very similar.
I go
It was
to,
in the general. Yeah.
right? As soon as this higher time frame order block was mitigated, where you have your buildup, anything in here is your buildup. Here's your buildup, right? Buildup. Here's your inducement. Here's your trap. Here's your order flow. And then where's your trap? Here. Then guess what? At this point, it can keep going higher like you want it, or it can just go deeper before it goes higher. Does everyone understand why I spent a lot of time on this example now, right? Besides the entries, do you see how it's fall? I know there's a lot of red, but are you seeing how this, right, matches this? Do you see how this matches this, right? You had a type 2 to type 1. Type 1 if you see that. Right? This is very important. That's how anything and everything will move. Doesn't matter what you're looking at, what you're trading. I mean, even over here, where's your buildup? Here's right your buildup. You're gonna have some form of SMT again. Here, your buildup, your inducement, your trap, your SMT, your mitigation, and then after that, what happens? Order flow, release. It's always the same thing, but you just have to train your eyes differently by memorizing diagrams first, then applying it to the charts. So I would memorize these diagrams until just embedded in your brain, until you can't study them anymore, and then go to the charts. That's what I recommend anyone do. Okay, so this is the algo cycle that you should always be aware of for any movement, for any high, for any low in the market, right? But specifically when you have an order block, you always want to mark on the charts these 6 steps, always. Not just, oh, here's an order block and here's an inducement. Always mark these, always. I've done this thousands of times, and that's not an over exaggeration. This is serious, right? It's to the point now where I don't need to do that because not only do I do it, I teach about it, right? But you guys, every single person needs to be doing this. Now, for my breakdowns, I will be sending this 100% so you can learn it, but you need to always mark the charts the same way. Always include these 6 steps. Type 1 in the chat if you're going to be typing these 6 steps out, or at least analyzing them when you send your setups. Type 1 if you're going to be doing that. I want to see everyone, all 15 people, everyone, every single person. We have 7 more people. If you're not, you're getting hit. I'm kidding, but not. All 6 steps. One, good. All right, we have 5 people who are hesitant. So be it. All right, good. So this is how you should approach it now. We're going to go through this. We go here. Where the hell? I have this somewhere. All right. So this is how you should always be looking at it. Now, again, we're not going to go as deep in depth since we just did this, but I want everyone to identify each one by one. 1, 2, 3, 4, 5, 6. This will take 60 seconds at maximum. So let's pay attention and we'll get it done quick. All right. Let's say this is our order block here. Order block. First thing, I want everyone to identify the first thing. Boom, build up. Awesome. Now that we've identified the build up, what's the second thing? 5 seconds. 5, 4, 3, 2, 1. Good. We have our build up. Then we're building up literally towards our inducement. This is our inducement, right? So we have our build up. Now that we have our inducement, what's the third thing? Everyone circle the third point. What we're referring to. Good, right? Now that's the trap and the mitigation. Great. Now that we have the trap and the mitigation, what is the fourth thing? Great, right? This is what we call our beautiful SMT. Awesome. After SMT, what's the next thing? Order flow. Amazing. And this is how you always need to view the markets. Once you can see it, always the same patterns, right? Algorithm, pattern, same inputs, you get the same output. Always the same thing. This is algo trading, right? This is algorithmic trading. Then rinse and repeat. Guess what? Then this becomes a trap. This becomes the buildup. Then it just reverses over and over. And this is how you guys must see the markets. And then this is what builds ultimately our mastermind setups, right? And then if I touch you guys again. Well, guess what, everyone? I'm just going to finish this off right here. Now, guess what? What does this do? Yeah, Javon, you're seeing it. You're seeing it. Trevor's seeing it. Matthias is seeing it. It's a little bit like a coloring book, but I'm getting the point. Exactly. Good. And guess what? What does all of this create? What does all this create? This, my friends, is what creates what? What do you guys think all of these cycles creates? This is what creates structure. Again, fractality, chunk by chunk by chunk. It's just building a bigger picture, right? So this is what you need to understand. Cyclical cycles to build more cycles, to build more fractals, right? This is what the markets, this is what algo trading is in a very, I guess, crash course even way, even though we spent some time on this. This is what algo trading is. It's understanding inducements, buildups, traps, and this is what moves the algorithm, taking out buyers and sellers on every single time frame. So when I have marked out, taking out sellers, right? Taking out buyers, taking out sellers, taking out buyers. It's repeating this on every single move all in between. So does everyone understand now why understanding this cycle is essential? This is what builds our structure. take a quick 2-minute break. So right before we get into our mastermind prime setups, I would like to hear 1 or 2 people just share their inputs based on this. What are some key takeaways from this? Because this is definitely something I don't want to overlook by any means.
Key takeaway, definitely just marking all of those on the chart, just marking it, and just getting my eyes trained to seeing it.
Yeah. I mean, this is what builds market. This is what algo trading is, right? And this is what builds structure. So I just am trying to get everyone to understand that it's like, once you can understand these patterns, then you know what it's building. Once you know what it's building, then it's just like you have utter confidence, because it's not like this is just, oh, made up concept. It's literally everything that makes technical analysis work or fail. This is why everything market happens the way it does. So I just wanted to see if there were some who are now just having maybe some light bulbs going off, because this is essential. This is essential. Good. All right. Okay. So great. So now that we're good with that, I hope that we're feeling good about this. Just have confidence. And again, just because you see all this, you know what's going to happen. Doesn't mean to take everything. That's where now we need to focus on our mastermind, right? The prime setups. So everyone on a scale 1 to 10, I want you to rate how you feel about what we just went through. And be honest, if you're not feeling too good, say it. That's completely okay. If you're feeling great, awesome. If you're still working on it, we're gonna get it going. So go and type in the chat how you are feeling with all of this. All right, cool. Hopefully I'm explaining it in a way that makes sense. Awesome. So now what we're gonna do is we're gonna spend the last little bit going over our mastermind prime setups. Okay. So these are available in our bootcamps, and currently I am uploading all of the bootcamps into respective sections of the academy, followed by additional information. So there are several setups, but if I've learned anything, as you can see also from Chris's annotation, where his little tagline on his chart is less, less is more, right? Less trades, more money, less setups, more probability, higher probability. So that whole risk scale, right, that we created, that is still great and a huge resource to use it, and you should use it. But to make things even simpler, these are the only setups you should be trading. Absolutely nothing else. Only these. So what setups are these? Only 3 setups. Type 1 extreme, with or without order flow. A type 2 extreme, with or without order flow. And a type 2 decisional. Initially looking at these, right? Do you guys understand what I'm referring to? Kinda or no? Good. So let's hash this back. When you mark up your charts any single day, you always need and only should be taking these setups. Now, with that in mind, these are the highest probability setups. I mean, point blank. If there is one type of decisional, it's going to be a type 2. That's it. But what type of decisional? There are multiple types of decisionals that can work. So we're going to fill out these, and I want you to have a piece of paper, or I want you to mark these up with me. So you have these, and you're only going to be trading these every single day. Nothing else. I don't care how good it looks. You're not taking anything else but these. If you only stick to these 3 setups, and you take maximum 4 trades, 4 entries a day, 4 trades, you're going to be set. Okay. So let's go ahead and hash these out. Type 1 extreme. Oh, I already had that marked up from earlier, but that's fine. Get rid of this, right? So what is our type 1 extreme, right? So our type 1 extreme, let's go through this. Type 1 extreme. This is going to be an example for a downtrend. So what's the first thing we always need to do when we go on the charts? As you could tell from the algo, what's the first thing you always need to be aware of from a higher time frame perspective? You need to be aware of, right, the trend, always the trend. Trend line, great. If you want to mark structure, fine. But we know we are in a downtrend in this example. I wish this was straight. It's not. It's fine. So we're looking for sells here. We're looking for sells, evident. So now that we know we're looking for sells, we want to ask ourselves, what is the structure? So let's make it obvious. What is the structure? We're going to see a low, lower high, lower low, lower high, lower low, right? Where is the type 1 inducement in this example? Our type 1 inducement is inducing counter trend traders, right? It's going to be inducing a reversal for SMC traders. So a false BOS per se. You see a lower high broken, right? This is our inducement. But before even getting there, how do we know if this is an inducement or a BOS? Bonus points for the first 3 people that say, how do we know? Boom, 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 boom. Good. We know if this is an inducement or BOS, depending on what this low mitigates to the left. So if we have this, right, if this mitigates a true order block, right, this is going to be a BOS, because if this is a true order block, we're going to view this as a BOS because it's structurally aligned following to go higher. So now if this is an SMT, we know that this is going to be an inducement. Now, what does this SMT mitigate to the left? What do I mean by this? And I posted a chart in the chat, but this mitigates random imbalance and but I mean not true OB. This means if it's lying at liquidity or no imbalance. So when I'm saying this is, it's like if you see a whole bunch of wicks and then just an order block, it's just not relevant, right? So this will happen if price, right? This will happen if price is mitigating an order block that's lying at some form of liquidity, even if it has an inducement before it, right? Maybe to go higher. If it's lying at liquidity, no, right? So that's first thing. If you just have a huge imbalance over here, that's going to be an SMT. So you're going to look to trade it down. It didn't mitigate anything relevant, so it's going to go lower, right? And the last and not least is going to be this, or no imbalance. What do I mean by this is if there's a wall, right? If there's a wall and everything is efficient, right? This tells us that it's not a relevant area. So it's going to cause a pullback to go lower. So with that being said, this is our type 1. Now our type 1 is always going to be an extreme. So our extreme order blocks, as we know, they lie at the extremes of structure. But if this is structure, that's not, this isn't relevant, right? We need to look to the next extreme. Now over here, this is going to be our extreme order block. So if this is our extreme order block, there's two different scenarios or two different variations. One is this extreme can mitigate a previous order block. So in this example, do you guys see how we would have a high, a low, lower high, lower low? This would be a type 1 extreme with, I can't do this, but with order flow. If it has order flow, it's very high probability, but it doesn't need order flow. So again, in an example like this, if it has order flow, all the better. How many times have you guys seen a setup like this? How many times have you guys maybe seen a setup like this?
It was on EU on Friday.
Was it?
Yeah.
Yeah. Yeah, maybe we can check. I don't know if you have a link or something, maybe we can use to reference. But yeah, if not, we can use that as a reference point after we go through this. But yeah, EU on Friday, exactly. And for instance, just taking a step further, this is EU on Friday. Where do you think this type of setup will occur? Thinking about everything we just went through, marking out the structure, where do you think this type of setup is going to occur? This will most likely occur at the end of an internal trend. So if you have your structure, damn guys, if you have your structure to the left, right? If you have maybe a supply order block to the left, and you are looking to take a sell from a higher time frame over here, from a long-term perspective, what I'm saying is you're going to see this exact setup that looks really good. Where this is typically going to happen is at a higher time frame order block. These types of trades will oftentimes lead to swing positions. I'm not sure if that's going to click or resonate with some of you guys. If not, don't worry, we can go through it. But this is just where can you typically expect to find these types of setups, and they're going to be at the very top of a new trend that's starting. So this is where you can find these types of setups that they're going to start a new trend. The SMT is a crucial part because after the SMT is mitigated and mitigates your order block, oftentimes it'll just absolutely melt away. So these are some of my favorite setups. And again, it doesn't have to have order flow. The only other variation is if it doesn't have order flow, is it would look something like this. It would just look something like this, right? This would be the absolute, right, extreme that actually mitigates an extreme point, right, to the left. And again, I'm not saying this follows order flow, but this would just be an extreme point, no order flow, and then it'd be going lower. That's all. So does everyone understand the difference between a with and without order flow for a type 1 extreme? It's just if it mitigates order flow or not. These are easiest setups ever. I mean, these are my favorite setups. It's just picture perfect blueprint daily. Was this the picture, Dylan?
Yeah, that's the one that I was thinking about.
Right. So yeah, even here, right? What do you see? Here, 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 here. Where's your inducement? Right here. Where's your extreme? Obviously, your extreme is here. And professional tip to refine your extreme, just identify the engineered liquidity within. Good job, Chris. And then what happens? Oh, here it comes. And then guess what happened? It's just going to rinse and repeat until it gets all the way down lower. View it in patterns and trust it. Don't get emotional. If this is the pattern, trade it. Don't, oh, it's going to work. Oh, it's not. If you can just follow the rules, it's fail proof. It's 100% fail proof from a profitability and consistency standpoint. If one, you apply it correctly, and two, you're consistent in the application. Keep it simple, right? So this is one of my top 3 favorite setups, really the first favorite one. All right. So I think everyone should understand this at this point. Just want to make sure. Yes. Good, good. Everyone understands this. Perfect. Now we're going to look at this example. Okay. And again, can anyone tell me a quick point? What other type of liquidity tells us specifically how we know this is going to fail? Can anyone tell us?
Trend line.
Exactly. Good. Trend line, right? Because you're going to see a trend line. Whenever you see a trend line, it further hints at your type 1, right? So your type 1. So now let's do the same thing. If this is your inducement, right? And this is your order block, how do we know if this is a true order block? How do we know if this is a true BOS to go lower, or how do we know if this is an inducement? Mark on the screen. And I'm just going to be challenging you guys to always mark these points, because you must mark these points. Right? How do we know if this is an inducement to go higher or a BOS? It's because of an SMT that'll mitigate to the left. So exactly as I'm marking out these pictures, you need to do the exact same thing when marking up your charts, right? You have your SMT, you then have your extreme, you then have your type 1. And again, this is for a false BOS. These types of traders, oh, well, here's a BOS, and then I just want to go lower. No, right? So this is how we're going to use this to our advantage, and we're trading the opposite direction. So now we have, again, structure. And before you mark inducement, always mark structure with your highlighter tool, always, because it's going to help you see it so much more clearly, right? Here's your inducement, here's your extreme. Here then is going to be your target, trap to trap, taking out, right? Sell stops, buy stops, buy stop losses, sell stop losses, however you want to view it. And then again, your RR tool. If you only trade these setups, you'll be good, right? Here's your buy, and then here's your sell. Now let's go on to the next one. Does anyone have any questions before we go on to the next one? Again, we're going to go through all of these examples real quick, or these diagrams rather, and then we're going to go through one example for each type.
Hey Griffin, I've just sent a link for the Type 1 Extreme. I was just wondering if you could confirm that that's the same.
Let's see, right? So even so, as you have right over here, or yeah, over here, what you have is you have something that looks like, I mean, it is one, definitely, but I think it'd be even more clear on maybe a 2 minute or 3 minute. But yeah, so what I would view this as is I would view it as something like this, right? This is what I would view. What some traders who aren't too confident in structure or have a lot of experience, they would be marking here, 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 right? But then guess what? This all of a sudden doesn't look like what our pattern looks like. So we just want to make sure that you need to make sure your structure points look exactly like the pattern. So here, right, the structure points, they're not fitting exactly like the pattern would. So if that makes sense, great. Now what you need to do is you need to make this look like this. And how do you do that? Again, you would just clear this again. You would make it look like here, here, here. You would have to go to a different time frame. So again, this might be on the 2 minute or the 3 minute, but you need to go to the time frame where the structure is obvious and most closely resembles what the diagrams look like. But yeah, this is an exact example, Zod. So here, what do you see? Order flow, right? There's no imbalance. You then see order flow. You see, right? Yes, equal highs. You see inducement. And then what happens again? This is your inducement. Where's your buildup? You have your buildup over here. Where's your SMT? You have an SMT here. SMT mitigated. And then you then have, of course, your price will start to run away. Now, when I say order flow after, it doesn't always have to initiate order flow instantly. It can then just come back, at some point in the future. But that's generally the cycle. So this is a very good and clear example of that. Does this make sense?
Yeah, thank you.
Perfect. Yeah, man. Good. And yeah, as I'm going through these, if you guys have an exact example that I can reference quickly, that'd be perfect. I would love that. Good. So these are type 1 extremes. So I just want to make sure we're all feeling good about this at an initial glance. No questions about type 1. I'm just going to ask for questions at the end of every type of extreme just to make sure everyone's on the same page. Because I know some people might get it instantly, others might not, but I'm here for everyone, not just one type. So we all good? Yes? If no one says anything, I'll just assume we're good. Good. All right. The next type is our type 2 extreme. Now, the difference between a type 1 extreme and a type 2 extreme is what? A type 2 extreme respects structure, lower highs and higher lows, right? A type 1 breaks structure. It's a false BOS. A type 2 respects the trading range, right? So over here, first thing, where are we trending? Draw a trend line, whatever, we're trending down. Where's our structure? Low, lower high, lower low. In this example, we know where is our order block according to the name of our setup. It's going to be an extreme. So we're going to identify our extreme over here. Now, where's the inducement for this extreme? Go ahead and identify in the chart. Where's the inducement for this extreme that validates this? Good. This is our inducement. This is our inducement for the extreme. And this is going to be our type 2. Right. Again, our type 2 inducement, what type of traders induce? You always need to remember we have higher time frame traders and internal time frame, or main leg, internal leg. So these internal traders, what are they seeing? Again, this is just a clean example, but what's going to happen is you're going to see all of this. They're seeing buys, right? They're seeing buys. So because they're seeing buys, they're going to be influenced to look for buys to continue after this inducement. So you have your inducement, which validates our order block because you have sell stops getting triggered. You have stop losses of the opposite direction getting triggered. And then you are simply entering in this direction. So similarly to the first example, how do we know if this range is going to be from this lower high to this lower low? How do we know if this range is going to be respected? How do we know? We got 4 people who know. Good. Everyone, good. Yes, exactly. So now if this mitigates an SMT, we know that the range will be respected, just like this. So now I want to ask a little bit more complex, rather, question. How do we know? Notice that, and you guys might be thinking this as well. How do you know if the range is going to be broken or respected short-term or long-term? Meaning, notice how this over here, do you see how this mitigates an SMT, but it actually breaks the range, right? Over here, it mitigates an SMT and it respects the range. So ultimately, this setup is right here. But why, even though both of these lows mitigate an SMT, can anyone tell me why it would go up to this order block rather than respect the range? Why would price break the range versus respect it, even though they're both going to end up failing? How do we know? How do we know if this is going to break the range, right, or respect it? And what I'm saying is knowing if it's going to break it to go lower or just respect it and go lower. I'm not saying just to reverse all the way. We know that if price were just to reverse all the way, this would be a true order block. That's the only it's going to happen. But how do we know if it's going to respect the internal structure or break it? Good, Kostas, exactly. Angie, look at your MB. What tells us is the strength of the SMT. What do I mean by this? If the SMT itself, again, this is going to be our type 2, and this will be our type 1 example. I'm just going to fade this out a little bit because we could have this over here. So how do we know if it's going to respect our structure for a type 2 extreme or break it for a type 1, right, extreme? We're going to know based on the strength of the SMT. What is the strength of the SMT and how do we figure out what it is? Ultimately, it's going to depend what type of SMT price is reacting to. So if price is mitigating, let's say an order block that is just lying at liquidity, right? There's a ton of money down here. We need to ask ourselves, what do we really think it needs in order to go and break all of this? If there's a ton of liquidity lying below here, right? Do we really think that it needs to grab a bunch of gas to break this? Or are we going to envision that this is like a magnet? This is a magnet that's really just sucking price and driving it to go lower. So if there's a magnet here, if we see a shit ton of liquidity and we see this SMT over here, what type of setup do you imagine is going to work in this scenario? A type 2 or a type 1? Let's see, I want to see what everyone has to say. Type 2, type 2, type 2. In this sense, it would be most logical for the type 2 to work, because if there's a huge magnet here, if there's a shit ton of liquidity, or if there's a wall, for instance, it's going to make a lot more sense for price to be more likely to be magnetized to liquidate these lows. So it's just going to engineer some internal inducement for it to collect in order to break it. That's what I'm referring to the strength of the SMT. But now let's switch it up. Let's say you have this. Let's say you have something that looks like this. Just imagine this makes sense for a second, right? Let's say you have, this is still an SMT. Let's say that on a higher time frame, maybe you're bearish. Maybe this is a huge, massive order block that was just mitigated, right? And for an example, like Dylan, like we first started off with, that big order block was mitigated, but we didn't know which one was going to mitigate, right? What's going to happen in a scenario like this is, let's say you have an SMT that's mitigated, and maybe structurally you have a high, higher low, and this is our higher high, right? So what's going to happen is you're going to know ultimately which one is going to work based on this SMT. This SMT, notice, this is an order block. However, the difference between the first one that we identified, where it mitigated the extreme, compared to this one, where it actually took out some form of liquidity, is this one isn't lying at liquidity, right? It swept liquidity. So if it swept liquidity, you need to understand that this is still an order block. It's going to cause a reaction, and a much larger reaction than an order block just lying at liquidity. So for that reason, you need to expect, all right, this is going to have a larger reaction, right? This area is going to have a larger reaction. So we should expect it to collect some more gas in order to really break through this powerful SMT. So in this instance, guys, we're most likely going to assume that the first example is going to work a type 1, where if you have a stronger order block, if it's a higher time frame order block, if it's one that sweeps liquidity, it's going to have to collect some gas in order to go lower. So does this make sense, the difference between a type 1 and type 2? I know I'm trying to explain it the best I can and maybe going on a little longer than I should, but I just want to make sure I'm conveying it in the where you guys understand. Does this make sense? Why this type 2 would work and why the type 1 would? Okay. Good. So remember, they're both SMTs. What we're saying is ultimately it's not going to break this high. It will not. The question is if it's going to respect the internal structure or if it's going to induce and then break, right? So this is our type 2. Now I'm going to make this a little bit clearer for you guys here, so you guys can have this for notes. Good. All right, type 2 extreme. These are my second favorite type of setups, but the importance is knowing where these are going to lie, right? Where these are going to lie in structure. Okay, good. Again, this one, where do you guys think you're going to typically find this setup? We know and discuss that you're going to find typically this setup where you're starting a new trend, right? Where you're starting, this is going to happen before structure is broken to the left, right? So this is going to happen right over here when you're starting one. Over here, where do you think you're going to find this type of setup? Exactly, Trevor. In a trending market, this is where you're going to find this setup. Good. I'm glad you're picking up on them. I'm very glad you're starting to definitely make sense of this. So that first type of setup, if this is just from a higher time frame perspective, you're typically going to look for that type 1 extreme over here. your type 2 extreme, you're going to be looking for in a trending market. Got it? Good. All right. This one, let's do this real quick. Everyone identify where the order block is. Where's the order block in this example? Let's go through this quickly together. Order block, order block. Good. If this is the order block, right? Where is the inducement? How do we know this is a valid order block? How do we know this is a valid order block? Where's the inducement? Hang in there, y'all. I'm not seeing annotations. That's fine. Good. That's fine. Inducement, right? Where's the SMT? How do we know if this is? Okay, so yes, this is an SMT, right? This is an SMT, but how do we know if structure over here is going to be respected or broken? Are you guys following what I'm saying? I know we're being on here for a while, but so you guys have identified this, right? When I'm asking for the SMT in this example, I'm simply asking, how do we know if structure is going to hold in order for us to go higher? Or how do we know if it's going to break? Because if it breaks, guys, doesn't this come back to, right, our first type of setup? This comes back to our type 1 over here, because this would be our higher low, higher high. It can go lower and then go higher. This inducement. Good, 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 good. Exactly. So you're going to see this SMT over here as Trevor, as Dylan, everyone else. This is going to be our SMT. It's going to be mitigating some form of a relevant order block. If it's not a decisional or an extreme, if it's engineered liquidity, whatever it might be, if it's in an imbalance, it's not relevant. Good. So that's how we know if this is going to break. So whenever you see structure, ask yourself, what is the structure you're seeing? Good. The second thing, before you even identify the order block, ask yourself, what does it mitigate to the left? If it mitigates an SMT, guess what? You now know you have your two setups you're looking for. Your type 2 extreme, or you're going to be looking for your type 1 extreme. And that's it. Keep it simple. You're only looking for two setups. And guess what? They're both in a trapping and a trending market. You're literally prepared for both scenarios. 2 out of 3 are in your favor. The only one that's not in your favor is if this is a wrong or if this is a right order block. So ultimately it depends, 1, what the structure is. 2, if you know what this mitigates to the left, it's easy. If it mitigates an SMT, boom, I know it's either going to be this or it's going to be this. You're prepared for any scenario. Like it's very, very simple once you understand the complexities of it, right? So it's just making it simple. Okay, so good. I'm glad we're all on the same page about this. Great, awesome.
And hey, Griffin,
Yes, sir.
that I'm following correctly. And so if we did have this to the side and we take liquidity, we would then look for it to then
Exactly.
take this one out, right?
Yes, sir. Exactly.
All right, cool, 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 cool.
Yeah, because that ends up being what type of prime setup? Good. Started typing it before I even finished.
Yeah.
Yeah, man. And you're prepared for either scenario, and you're gonna know. And like you'll hear me always say, even though I want to have something happen, I know that it doesn't have to. So like I always have like, this is what I want to have happen, but I know if this doesn't, then this will. If this, then
Yeah.
this, you know. So if this doesn't work out, I know the kill shot is right below it. So you're prepared for either scenario, and it's not going to do a random thing. It's always going to do one or the other.
Yep.
Good, good. Yep. Awesome. All right. So we're almost there, guys. Almost there. Does anyone have an example of something that they found that they would like to share while we're going through? I think we have a couple in the chat. Let me scroll up. I think Matthias, you shared one. Exactly. Boom. There you go. This is a perfect example, Matthias. Good job. So this is a sell example, right? And again, I'm keeping this simple, right? Just for diagram purposes, but you should know the algo cycle is always going to be a part of it. I mean, even here, if this is your setup, you're going to have a build up, you're going to have your SMT, order flow, drop. And you guys have all of these diagrams. You guys have all of these diagrams. They're also in the bootcamp. So let's go to what Matthias was saying, right? For example, what we're referring to is our setup. Let's think about it. Where is the structure? In this case, you can clearly see, as Matthias has labeled, we have, change that too much blue. We have high. I'm just gonna keep this simple for now. Let's just say here, low. You have a lower high, you have a lower low. Great, now that you have your structure, let's mark it out. How do we know if this, right, if our range is gonna be valid? How do we know, even though it's not on this chart? How do we know if this range is gonna be respected or if it's gonna be broken? Good, I'm a heavy believer in repetition, as you guys probably tell by now. Boom, SMT. So now that we know that the SMT is mitigated, let's think about it. Where's the inducement? Where's the inducement before this order block? Good. We can see we have something that looks like this, this. So perfect. This is our inducement. This is our inducement into our extreme order block. I want to ask you guys, maybe take a little step forward. Think about it. If this is our inducement before our order block, where is our buildup? Where's our buildup just for the inducement? right? So our buildup for the inducement, we're building up towards the inducement. Good. Now that we have the buildup, right? The next phase that we need to identify is, oops, shit, not that. After the buildup, we have the inducement. The third thing is the mitigation. Boom, mitigation in the trap. What's the fourth thing? Oh shit. Oh shit. Crazy. Fourth thing, SMT. SMT. Where's the SMT? Boom. After the SMT happens, where does price go? Seems random, right?
Order flow.
Order flow. Order flow. Exactly. Boom. Order flow. Order flow. Mitigate it. Order flow. Boom. And guess what? Where are you targeting? Where's your next trap? I want you guys to identify where the two take profits. Two take profits in this example. Boom. That is it. Inducement. Inducement. Do you guys see why it is so fucking essential to understand how everything moves? Like, even before this happens, you can predict all of this with an absurd high degree of accuracy, right? This is how and why I was able to develop this term algo trading, because I develop and I see patterns thousands and thousands of times. There's no such thing as randomness. Once you understand that, then you're driven to figure out the reasons. This happens everywhere, all the time. I mean, it's cyclical, right? So does this make sense why I'm constantly having you guys practice? It's not just learn it and study it. You're doing it right now. I want to see what you guys are doing.
Griffin, just a quick question.
Yes, sir.
So would it be correct in saying that those two take profits, one's an internal structure point and one's an external structure point?
Exactly.
Yeah.
Exactly.
When would you know it's going to go further than that, in a sense?
When it's going to go lower than here?
Yeah. So let's say if you did have a third take profit, would that just be you've took both of those profits and you're holding a small portion of it?
Yeah, that's a great question. So what I would do, and I also think this is in the bootcamp, but I'd be happy to explain it. What I do, right, is I don't just, oh, I'm going to take max profit here. For instance, let's say that this was my first entry. If this first take profit is in at least a 1 to, at minimum, a 1 to 4, 1 to 5, I'm not going to take anything off. What I, of course, will do is move to break even. I mean, that's even before that point. So how do you know if it's going to be going lower than here? Few things. One, what is the trend? So if I had to, in this example, let's say that our higher time frame structure was this. And let's say over here, this was an SMT. Practically speaking, we have our SMT. This is an SMT. What do we expect? Where do we expect price to come to? One of two places. We expect price to, if this is an SMT, that tells us we're bullish, right? So that tells us our true order, exactly. Javon, you're getting it, bro. I love it. Exactly. If this is an SMT, we know price will either mitigate the true structure, right? It will either mitigate our true higher low, higher high, or it's going to break it and go to a lower one. This is if we're bullish and if this mitigates an SMT. So in this case, if we know this is a counter trend, I would be taking off, in this example, I'd be taking off anywhere between 60 to 70% here. And then I would be taking for sure the rest out here. This is a counter trend, but let's switch it up a little bit. What if we were looking at a scenario that looks like this? What if we were looking at, say we have, I wish I could, this, it's not going to be to scale. But maybe if we were looking for, major cells. Damn, yeah, I wish I could draw more to the left, but ultimately if we're going to know if this is an SMT, so I just show you this. If we are long-term, bearish, and internally, if we had, let's say we have this, and let's say you're seeing this exact setup right here. Well, in this example, right, if you're looking at this, right, if you're looking at something like this, you're going to know based on the higher time frame structure that you can actually take this much lower exactly based on what it mitigates to the left. So how do you know how far you can take the trade? You have to repeat the process, but zoom out, because all of this is a part of something on a higher time frame. It's building a higher time frame leg. I'm not sure if I'm explaining it the best way, but you're going to understand where it's going to be going based on what the larger time frame is doing. Like if this is mitigating a true order block, we know that this is mitigating SMT, fine. But where's this SMT located? Where's this? If this SMT is located, for instance, right here, well, guess what, my friend? We're bearish long term, so you can expect to swing this thing all the way lower. But let's say the SMT is, let's say this is where price currently is, and you're looking at, this. Well, then obviously you can only take it down to here. So it depends where you're seeing it within the higher time frame wave.
Gotcha.
Does that make sense?
Yeah.
Okay.
Griffin, sorry, I just sent a link for a trade that didn't mitigate the order block. It just kind of came into the imbalance. And I was just wondering how you would approach something like that.
What day was this?
That was on Friday as well, EU.
All right, let's see. Trade use, let's just go here. Let me see, just 1 minute. So it's like 3 a.m. Friday. where was this?
I think it was just there. Yeah, that one. Just a little bit lower. Yeah, and then it kind of came into that imbalance. That's
it was this one?
no, this one.
Oh, this one. I see what you're saying. Gotcha. All right, yeah, let's take a look at this. So I had to go here. All right, so let me see. I'm gonna mute someone. All right, so yeah, what I would do is so again, I'm gonna go to the 1 hour. Let's zoom out. So first, I think it's evident we can see just basic whatever, we see, oh, here's our order block. Great. Again, I don't know what's all going on to the left, but let's just take a look as far as what happened. So here, what I would say, where I would immediately see is as soon as this order block was mitigated, where is the order flow transferring? If we zoom out, where is the next order block following order flow? Hassan, do you know? It's because this was mitigated, This is, even though there's not a third candle, you have your one, you have your two. This is what we call a single candle mitigation. There's still at this point in time an imbalance, There's still a gap, even though there's not a third point to the gap that's forming it. But we know, taking a step ahead, is that if this closes, I mean, pricing is made efficient because there's weight. So immediately, shit, are you guys still there?
Yeah, still here.
Ooh, I just got a notification that Zoom quit. Holy shit. Okay, thank God. I don't want this recording to crash. I'd be depressed. But anyway, so now we have our order block, So I know that anywhere within here, price can mitigate, like we talked about here, all the way up higher. So let's go to our lower time frame and figure this out. Let's go to the 30-minute, Okay, you have your 30-minute. I don't know if this is going to be the exact point we're referring to, so I can fast forward to that. I'm just trying to gain a backstory. Go to the 15-minute. Okay, that's fine. 5. Let's go to the one like you were talking about. So you were referring to this point, Order flow outlines.
Because I saw that as obviously a type 1 extreme again with the inducement that's in the middle. But like I say, it didn't just. I think it. Oh no, that was the first one, yeah, and then the second one was similar, but didn't.
So yeah, let's take a look at this, So this didn't mitigate, correct? I'm not sure if it did for you or not. I'm just.
It did on my provider. I think it was Oanda, but yeah.
Okay, so let's say that didn't mitigate, just to make things easy. So let's say this mitigated, Following order flow, you would assume that this would be your next order block. This is correct, Because based on, let's say, structure, you have, high, higher, low, higher, high. This is where price breaks, So now we're looking for sells. Now we have this high, we have a new low, a new lower high. So it ultimately depends, How do we know if this range is going to be respected or broken? What is mitigated to the left? So instantly we can see that we have a form of engineer liquidity, equal lows. This is also counter inducement, but let's just say, okay, let's just say this right here, We have some form of pool of equal lows, break and retest resistance. We know that anything over here is not valid, Because this is just a high liquid area. Damn, let's just put SMT and extend it because this is where, somewhere in here, you're gonna have an SMT order block, Where's the first order block with imbalance? Let's just say somewhere in here, we're on the 1 minute. So this would be a much larger order block on the 15-minute. So now we can expect a couple things to happen, Price will either come back up into our range and, respect it, or it'll break the range, Following the order flow, and then it will break. And Azad, everyone, what type of setup would this one be right here?
Type 1 extreme.
This would be our type 1 extreme. Exactly, I know it's starting to get a little sloppy. I'm just trying to go somewhat quickly through this. But yes, this is our type 1 extreme. Here is our inducement right here. Here would be the inducement. And now it looks perfectly exactly as we want, because this is the last order block within that push. So this would make sense. Please never take an order block that looks like this, anyone. Anyways, now we want to identify, well, how can we refine this? Now, this is the 1 minute. And what I always say, when in doubt, zoom out, You always want to zoom out before zooming in. And this is something that a lot of traders will get stuck on is lower time frames. Let's go to the 30-minute at first, Let's go to the 30-minute. Oh, that's not going to help us. 15. Okay, do we see 15-minute order block? No, we don't, So since we don't see a 15-minute order block, let's zoom out even more. Let's go to the 20-minute. Do we see a 20-minute? No. Do we see a 25, 30? All right. So at this point in time, we have our 30-minute order block. So remember, all that price needs to mitigate is this, even with the setup we have in mind, This is all the price needs to mitigate. So how can we make sure that maybe we can have the right refinement? It doesn't look like it's going to be on the higher time frame, but I identify the highest time frame just so we know where the threshold is. Where is the minimum it needs to mitigate? Where is the highest? So now let's go back down to the 15-minute. Let's go to the 10-minute, Based on our inducement, we need to be finding an order block somewhere above our inducement to, within this, push right here. That's where we need to look for our order block. So let's go to maybe the 11-minute, 12. You see it? Do you see the order block is on?
Yeah.
12, right? So this would be the order block in this case, right? And sometimes it's not going to be on the time frames that you want it to be, right? So we need to be creative, and what I always say is find the largest one first. Don't just find the one that looks great. It's always awesome to set a limit at that, but find the largest one you can that makes sense within your area. So this would be the 12-minute. If we go to 13, fine. Let's just go back to 9. Well, now we're starting to see some confluence. The 9 and the 12-minute makes sense. 8-minute, no, nothing. 7. Now we're starting to see even more confluence. This is starting to become a general zone of interest, right? So then you just go down to the 6. Now we're starting to get to a more solidified zone. So now here would, you can even refine it to here if you would like to, but going just to, the 2-minute or the 1-minute, you're oftentimes going to be over refining, your order blocks, especially doing that. So what I would do is identify the largest and then, set a limit at the smallest one. You can definitely do that, but you want to make sure you're not only selecting the small one. So as you identify, this still makes a lot of sense, but it could just be over refined. So in this case, what ended up happening was, right, SMT as we identified. Now this is our SMT. We can expect this, some form of build up into here. If this is the mitigation area, this will be some form of pullback and maybe to go lower. I don't know if price sells off for today's not trade, but right. And then where would your SMT be in this example? You would have SMT here, maybe an SMT here, where you can expect some form of pullbacks to order flow, or it can just drastically sell off. I know there's lines all over, but this is how I would approach it. I know that was elongated, but does that make sense?
Yeah, so just a case of over refining. I should have just stuck to a few more minutes up, kind of, in a sense.
Yeah, the setup was perfect. The setup was perfect. You just want to make sure a crucial skill is not over refining and just getting practice of time frame agility, zooming out, zooming in, going to maybe some time frames you wouldn't look at to see if there's a better option. But for those who are listening, you don't have to go through every time frame. If you just want to stick to your time frames, you can. You can also just take a picture or note the time frames I use. 1 through the 5-minute, the 10-minute, 15. I love the 10. I love the 20 and the 25. Just use those all the time. I love the 2-hour, the 8-hour. These are just some of my favorite time frames. But I could use the 7-minute, the 9-minute. It all depends what's there and what's not. So in a case like this, notice how you have clear order blocks. Even the 5-minute, oh, it was missed. Yeah, it was. But what if you go to the 6-minute? The 6-minute was actually mitigated in this case. So that's why it's always important to make sure you zoom out just to verify there's nothing large. And you do that just so you don't miss the trade, just to make sure it can touch this, but it also can go deeper just to be safe. All right, sweet.
Thank you.
Yeah, man. Awesome. Right. Cool. Good. All right. So then we have the last type. I mean, you guys can just go through, you guys should know this at this point, but this is my last favorite type of setup. It's going to be our type 2 decisional. And I really hope this recording processes. All right, so our type 2 decisional. I love decisionals. Decisionals are some of my favorite. But if you focus on decisionals or you're always marking them, I promise you are going to have a very high loss rate. There are only certain times and places to use decisionals, right? And it doesn't really matter what type of decisionals you're looking for, but what does matter is where they are in trends. If they're starting a new trend, if they're in the middle of a trend, what type of liquidity is lying before them, X, Y, Z. So looking at this, first thing, right? Trend, low, lower high, lower low. The type 2 decisional, whenever you hear type 2, it respects the range. Type 1 breaks it. So what is our range, right? Our range is here to here. In this example, we know that we're going to have an extreme up here, but we're not going to pay attention. Our decisional will look something like this. Now, a key point, can someone unmute their mic or type in the chat? What are the 3 types of decisionals possible? Or where can they be located?
There's one before the break of structure.
Exactly.
One after the break of structure, and then the imbalance for type 3.
Good job, Dylan. Awesome. Exactly. So we can have a decisional that happens before a break of structure, before the continuation, right? This would be our decisional. We can have a decisional that happens after, right? That happens after. And does it matter how much or how far after? Not really, but this is what you can expect. It could happen after, or what can happen is your decisional can not look like a pullback, but it can just be, right, that one candle that has an imbalance before it and an imbalance in it. So that's a decisional type 3 that's on the website. You guys can look at that. But for this example, let's just take it as it is right now. So let's say you have a decisional. It can be any of these 3 types. This is your decisional. Simple. You're looking for a decisional. And for a decisional order block, and you're going to have your type 2, right? Your type 2. Now, again, how do we know if your decisional is going to be broken or if it's going to respect your decisional, right? How do we know? Get used to the repetition. You guys are having homework for weeks right now. Good. Exactly. Good job. Right. So SMT, right? SMT may not even mitigate anything, right? So can anyone tell me most specifically how you can have a lot more confidence in a decisional working out versus an extreme, besides the fact that it mitigates an SMT? Can anyone tell me when you would generally look for a decisional versus an SMT, besides of what it mitigates?
If there's lots of liquidity over here.
That's a factor, yes. But think about what the market is doing right now. Thinking about trends.
Typically, when you've kind of got news and a bit more high impact, because you kind of see a bigger move that it doesn't kind of necessarily recover all the way to the extreme. Would that make sense?
Yeah, exactly. News or some large steep trend. Whenever you see, this is some of my favorite entries, and you guys can make a note of this. These are some of my favorite scale in entries. Whenever you see me taking more entries, it's typically based off this setup, right? Because what happens is when you see this decisional, oftentimes what's happening is you're in a trending market. So when you look at this, let's say you have, this, and if we're really just long-term bearish and, maybe we're looking to go somewhere down here, remember what I always say, if there's no reason for if there's not a reason for price to go somewhere, it won't. And if it's trying to go somewhere and it doesn't have a reason to stop, then it's just going to go all the way there, right? So in other words, if this is where price is going, and if there is nothing, if this is all efficient over here and there's no reason for it to stop or cause a pullback, never expect it to come up to here. It just needs to have a short mitigation to go all the way lower. So these setups are what you're going to expect in trending markets, steep trends, continuations. So if you're expecting price to drastically sell off and it's not mitigating any, go all the way lower. So these setups are what you're going to expect in trending markets, steep trends, continuations. So if you're expecting price to drastically sell off and it's not mitigating anything to the left that's going to cause price to have a pullback, a noticeable pullback, you need to assume that it's just going to do a quick mitigation and keep going lower. This is how I get my scale and entries. And these are how, when you get very good at this, it's going to drastically compound your account and your confidence is going to go through the roof because you're going to know where to find these, the whole application. For instance, you'll find a type 1 setup up here. You'll find a type 2 setup somewhere over here. And this is where you're going to find your type 2 decisional setup for your continuations. There's specific places you're going to find these setups the more you practice and the more you experience them. So these decisionals, right? What's another key point that you guys know about decisionals? I know all of you guys, or most of you guys should know it, but I'm hinting at it. In the future, what do you think this is going to do? Let's say you have another SMT right here. Right? This, your scale and entry, why it's so important is because it can just get taken out for the price to go up to your extreme. This is why I don't recommend traders do scale-ins until they're very consistent and profitable. Adding scale-ins, more entries does not equal better if you can't manage it and it becomes too much for you. So this is something that can happen, but also what can happen is what? Decisional extreme. How many times have you might have seen something that looks like this, waiting for an order block and it just keeps going lower? Right? Decisional, extreme, right? So these are things that I've noticed countless times, and hence me putting together a simple way. I say simple, hopefully it is simple in some degree to understand, but this is a decisional type 2. These are the only 3 setups that you guys should be taking at any given point. If you stick to these 3 setups and you limit yourself to 4 trades maximum a day, I promise you, you will see exponential progress, exponential confidence, and just off the chart results. So I'm very excited to see how you guys approach this week and study this. I know this is a long study room, but hopefully you guys can see the importance of how everything is tying together, whether it be the algo cycle. Whenever you see an inducement, understand you have a buildup, you have an SMT, you go lower, right? This is how everything moves. And you just have to put all of the pieces together, and you will over time, right? Even if you've been doing this for months or even a year at this point, do not get discouraged. I confidently believe this year will be your year. It's just the energy I feel in the effing air, the aroma I feel with you guys, even on the effing call. I'm so confident in you guys and your ability. Stick to it. It doesn't matter if the past year, 6 months, 2 years, you guys have been unprofitable. You can literally change your life in 6 months. Grind, stick to it, and you'll be amazed with what you can do. But you have to know what you're capable of before you even do it. You have to believe it. Good. Awesome. All right. So then the last one, I'll have you guys just do this for me right here. Everyone go start first. What's the structure? Structure real quick. And then we'll wrap it up. Please God, make this recording safe. I effing hope so, because I'm not making this recording again. All right, I'm actually, yeah, mark the structure. Good, we have the structure. Damn, okay, I'm actually getting worried about this. Yeah, I'm trying to get through this quick so I can finish this last example, and then I can just stop this recording because I'll be damned if it's not going to save. All right, so structure, good. We have our structure. Good. That's great. Now my things aren't showing. Good, we have our structure. Let's say these are blue. Great. We have our structure. How do we know if this current trading range from this higher low to this higher high, how do we know if it's going to maintain? Oh, shit. Oh, thank God. Yes, exactly. Boom, right? Because if it mitigates an SMT to the left. Good. Now, where are the order blocks? Good, right? You have this order block, and then you have your decisional, you have your extreme, right? But this is our decisional. Where's the inducement? The inducement is where? Good. So now let's ask one step further. This is your inducement. Where is going to be your S&T after the order block is mitigated? Damn, you guys are killing it. Look at that. Look. Ooh, everyone is awake. Everyone is killing it. I love it. Exactly. This is our S&T. So then guess what? Then you simply expect S&T back to order flow. Yeah, Matthias, you're killing it. Go higher. Boom. Done. Always take profit to the side. Don't swing it, try and be greedy. Take some form of profit. Depending on what's to the left, it could just go all the way higher. Or guess what? It could just do this. Then come back down. And what type of setup is this? Good. You guys should feel freaking amazing. You guys should feel really good right now. Good. High, higher, low, higher, high, higher, low. And then guess what? You got it. You then see this. Bingo. I'm gonna make this look clear. There's so many drawings. Geez Louise. Higher. That is the beauty. We are prepared for any scenario in the highest degree, not chasing bullshit, right? Not chasing any bullshit. To get professional results, we got to act like professionals. And I'm very confident in all of your abilities. Again, I hate to be vulgar, but you literally could have half a chromosome and still do this as long as you just believe in yourself. As long as you believe in yourself, just believe in yourself and you can accomplish anything, right? And trading is all about believing in yourself and staying true to the course, right? Don't get greedy. Don't get anything. It's easy to say that, right? There's always going to be times where it's like, I could use some more money or I'm so confident. That's where I need some help. It's accountability. Right. We're here for you as much as you want to succeed. I guarantee you, I want that for you so much more because that's the whole reason this exists. I want you to succeed so much. The days you're not feeling like it, the days that you are struggling, just remember, you are literally the hero of your own dreams. You are the person who is going to save you from the place you're in right now. And surrounding yourself with others who are trying to do the same thing. It's supposed to motivate you, not discourage you. Right. So I'm excited for everything to come for you guys. I'm excited for everything. And last point that I want to say is, like we just talked about, the amazing part is by what we identify, structure, we either know it's going to, we know it's either going to break, or we know it's going to be respected, right? We know it's going to be respected. So you have your decisional, your extreme, and then this. Does that mean to take all of them? Absolutely not. You should only be primarily focusing on these two. If you're in a deep trending market where you know it's going to go higher, then you can consider this. But this should be a last resort. Don't always mark this out, but always identify these two. Always identify these two. These decisional trades, you should be taking, I'd say, 2 to 3 times out of 10. The other times, you should be taking only these. So make sure you guys are following that. Only take these for the most part. Once you get more experience, yes, you can take these. But if even, even cutting these out, do that. Adding these in will not make you more profitable. Example, I just want to show you with what we were talking about with Zod, right? If you're looking at this right over here, and you're like, oh, here's structure, cool. Here's, oh, damn, I gotta delete this shit. You'd be like, oh, well, here's structure. Oh, here's my extreme. Oh, here's my decisional. Oh, here's my extreme. You guys are going to just be losing a stupid amount if you don't know when to use this. But notice, if you just simply cut out one of them, you're going to automatically increase your win rate by, what is it? Is it half or 33%? I don't know what that inverted percentage is because you're reducing it. But regardless, your win rate is going to skyrocket just by ignoring this. So again, how often are you guys going to be looking at this decisional? How often? Type in the chat, how often are you going to be looking for this decisional? Good. Good. This is something for the future, not now. Don't. And I promise you, if I start seeing 3 order blocks, hell no. So good. All right. I'm glad everyone understands where we currently are. All right. I really do not want this recording to, I'm gonna cry if it actually doesn't record. All right.